Welcome to PyUncut, where we decode markets one headline at a time. Today's episode takes us to Cupertino, where the world's most valuable company, Apple Inc., AAPL, is set to report earnings that could move the entire tech landscape. With a $3.7 trillion market cap, Apple isn't just another company, it's the heartbeat of global investor sentiment. Let's unpack what's at stake this quarter, what Wall Street expects, and how long-term investors should think about Apple's future beyond the iPhone. Apple's earnings preview, what Wall Street expects. Apple will release its fourth quarter results on October 30th after market close. Analysts are expecting earnings per share of $1.74, up about 6.1% from the same quarter last year. For context, Apple earned $1.64 per share in Q4 2024. For fiscal 2025 as a whole, the street is forecasting an EPS of $7.36, a 9% jump year over year. Looking even further ahead, 2026 projections call for another 6.7% growth, bringing earnings to $7.85 per share. That steady growth, while not explosive, shows that Apple continues to deliver dependable profitability even in a slower device cycle. For income-focused investors, that consistency is what separates Apple from many high-flying tech peers. A history of outperformance. Apple has built a strong track record of beating expectations. The company has surpassed Wall Street's EPS estimates in each of the past 4 quarters, a streak that reflects both its operational discipline and its ability to extract value from a massive global user base. In its most recent Q3, Apple reported EPS of $1.57, up 12.1% year over year, and 10.6% above consensus. What's remarkable is how Apple continues to grow across all major regions, Americas, Europe, Greater China, and the Indo-Pacific. But here's where the Apple paradox shows up. Despite these stellar results, shares fell 2.5% right after earnings. Investors had simply priced in perfection. Yet, within 5 trading days, the stock rebounded 13.3%, proving that short-term jitters rarely derail Apple's long-term momentum. The big picture. Apple versus the market. Even as Apple continues to generate jaw-dropping profits, its stock performance has lagged broader benchmarks this year. Over the past 52 weeks, Apple gained 7.1%. The S&P 500 index, SPX, rose 13.4%. The technology select sector, SPLF, surged 20.4%. This relative underperformance suggests that investors are taking a show-me stance, waiting for the next big product catalyst, whether that's in AI, wearables, or RV or VR. And that makes this upcoming earnings release more than just a financial update. It's a sentiment checkpoint for the entire tech sector. The psychology of Apple investors. Owning Apple's stock isn't just a financial decision. It's a psychological one. For millions of retail and institutional investors, Apple is synonymous with safety, innovation, and brand loyalty. But even the strongest brands face investor fatigue when growth slows. The central question now, can Apple re-accelerate? Earnings growth of 6 to 9% may look modest compared to the explosive AI gains at NVIDIA or the platform expansion at Microsoft, but Apple operates on a different playing field. Its ecosystem locks in 2 billion active devices and tens of billions of recurring revenue streams from services like iCloud, Apple Music, and Apple TV+. As the iPhone matures, services are becoming Apple's growth engine, accounting for over 25% of total revenue in recent quarters. That recurring revenue stream helps smooth out hardware cycles and is a big reason why Apple continues to command premium valuation multiples. Key drivers for this quarter. Here's what analysts and investors will be watching most closely when Apple reports on October 30th. iPhone sales and upgrade cycle. The iPhone remains Apple's cash cow. Any signs of a shorter upgrade cycle or strong early adoption for the latest models could be a bullish signal heading into the holiday season. China and emerging market demand. With global smartphone competition intensifying, especially from Huawei and Xiaomi, investors will watch how Apple's brand resilience holds up in price-sensitive markets. Services growth. Apple's App Store, iCloud, and subscription bundles are the margin heroes. Analysts expect double-digit growth here. Any slowdown could spook investors. margins and cost management. With inflationary pressures easing, Apple's gross margin, hovering around 44%, will be a critical indicator of pricing power. AI and product roadmap signals. Tim Cook's comments on AI integration across devices could be the real story. Apple may not move as fast as Microsoft or Google, but its user base gives it the rare ability to deploy new AI features at scale. Analyst sentiment is still a moderate buy. According to bar chart data, consensus opinion on Apple stock is moderate buy. Out of 41 analysts, 21 rate it a strong buy, 2 call it a moderate buy, 15 suggest hold, 2 go moderate sell, and 1 goes as far as a strong sell. At around $250, Apple trades just slightly below its mean price target of $250.09, suggesting limited short-term upside but strong long-term conviction. This balanced sentiment indicates that while Apple may not double overnight, it remains one of the most stable compounders in the market. The PyUncut take. Apple's quiet evolution. In an era where every tech company is chasing AI headlines, Apple's strategy feels quieter, but no less powerful. Rather than rushing out flashy AI models, Apple seems focused on embedding intelligence directly into its ecosystem, from on-device privacy to predictive health and smarter automation. This could be a long game. Apple's approach aligns perfectly with its design philosophy: slow, deliberate, and deeply integrated. Think of it as AI the Apple way. The upcoming earnings may not bring fireworks, but they'll likely confirm a narrative of stability through transition. For long-term investors, that's often where the real compounding happens. Investor takeaway. As you tune in to Apple's earnings on October 30th, keep these 3 truths in mind. Apple is no longer a hyper-growth stock. It's a high-margin, ecosystem-driven machine. Services are the story, and recurring revenue will determine valuation over time. Short-term dips are opportunities, not warnings. Apple's ability to rebound post-earnings has become a pattern rooted in investor trust. So while the headlines will focus on whether Apple beats or misses, the real question for investors is simpler. Are you investing in Apple's next quarter or Apple's next decade? Closing thoughts. That's it for today's PyUncut Market Brief. As Apple gears up for its earnings reveal, remember, great companies aren't judged by one report, but by their ability to keep reinventing themselves. From the first iPod to the Vision Pro, Apple's story has been about evolution, and this earnings season could mark the next quiet turn in that journey. Stay tuned, stay curious, and keep investing with conviction.